5 solid years of trading, and all I can say is that I have seen hell fall. But somehow I managed to scale through profitably, and I have proof of this. You can go watch this video to see how much I've made for the entire year 2025. For this video right here, I'll talk about 7 harshest lessons I've learned in 5 years of trading. All of my harshest moments, these were the 7 lessons I learned, and you need to know about these lessons so that you don't suffer as long as I did. Lesson 1: trading is not for the poor. So a lot of people going into trading recently are going in because they want to start making money. Let me tell you something, trading is really difficult, and a core part of trading is psychology, being able to act under pressure. When you have your whole future wrapped and given to trading to determine, when you have your next meal determined by the markets, when you have all your bills, all your rent, everything determined by the market, you are bound to fail because the market is really chaotic and unpredictable, and you as a human being have survival instincts. As long as you are a human being, you would really feel that compelling urge to break your rules, to try to over risk, to try to chase trades. So once you are broke, you have already made it harder for yourself, because the people killing it in forex have other things they do. They have other businesses, other sources of income. So if you're coming to forex empty-handed, like this is your all and all, I bet you it's going to be more difficult for you because you cannot rush this process. You're going to learn a lot of things via experience and losing money. And you really want to have how to get money to pay for real mentorship, which makes your whole journey easier. You want to have the money to actually buy prop firms. You want to have the money to fund your accounts. Now, where are you going to get that money from? A job or something else. Now go get it. But when you're getting these jobs, always make sure it's going to give you time to trade, or you're starting this little small scale business or something, you want to make sure it gives you time to trade and you'll be fine. Lesson 2: every strategy has bad times. Now, for many years, I suffered going from strategy to strategy when I see losing streak. And what fuels this was social media. Everybody on social media seemed to be winning. Everybody on social media act like they have figured out this whole forex thing. So it's as if nobody loses. So when I lose, I feel really bad. I feel guilt. I feel shame. I feel all kind of negative emotions, and I start tweaking my strategy or trying to change it. Now, this is because I never knew that even a profitable strategy goes through drawdown period. So know this today, that all what it takes for you to become a successful trader is to stick to one working strategy, using it over and over again, and growing in that strategy. Now, this is a blueprint to profitability. And yes, psychology is a thing because it's difficult following a strategy and losing time. That's why you even have the whole subject of psychology being 90% of trading. Is because trading is not easy, because if a good strategy means winning every day, then why is there psychology and why is there risk management? It means anybody can trade and you can risk all of your money and be a billionaire in the next minute, right? But it's not possible this way, and that's why psychology is a thing. That's why risk management is a thing, because losing streaks are real and are normal. So I need you to believe that today, or else you're going to suffer like me, jumping from strategies to strategies. Now, before I proceed, if you're watching this video and you don't have a working strategy at all, you're struggling and your strategy is failing, you don't trust it, or you don't have anyone at all, message me on Telegram with mentorship. I'm going to teach you exactly the strategies that work for me and has been able to work for these people you see right here on my screen. This training lasts for 4 months because I want to see you learn all the foundational concepts of ICT trading, and then you're going to learn exactly how I put my strategies together. Then you're going to learn how to be a consistent trader and how to manage your emotions and psychology trading that strategy, because you're going to see me do it practical in your very eyes. So that's all contained in the mentorship. Message me on Telegram to know the inquiries about the mentorship, how it works, the days I teach, and what is the pricing. So let's continue. Lesson 3: your RR determines your win rate. Now, when it comes to win rate, it's literally how frequent the trader wins. So a lot of traders mistake it for thinking some strategies naturally win more than the others, or there are ways you could tweak your strategy and arrange your strategy in a way whereby you can just start winning more often than another strategy. But it's not true. All strategies, to me, all simple strategies are kind of neutral, if you ask me. But when it comes to win rate, your RR influences your win rate. If your RR is very high, 5R, 6R, 10R, your win rate is going to be low. which means you'll be seeing losses and losing streaks more often. And people that silently trade these strategies and stick to it are also people that are used to losing streaks and have accepted losing streaks. So don't get freaked out. So if you're going to copy somebody's strategy out there because it's 5 hour, you like how this guy made 5 times his risk on one trade, you like how this guy made 10 times his risk on one trade, know that these guys see losing streaks and they don't just post it, but they lose way more than they win. But they are profitable long term. So if you want something like a 50% win rate, then you should go for 1:2. With 1:2, the chances of having 40 something to 50% win rate is very, very easy if you're following a simple, repeatable strategy. And even 1:1 has even a higher win rate than 1:2. So the higher the RR, the lower the win rate. So if you don't like seeing too much reds, reduce your risk to reward and have it static or an average of 2 RR. Now, lesson 4, lower time frames are harder. So coming up, I thought everything was on the lower time frame because it's easy to always get into a trade. Now, this is a trick. Most new traders are stuck in the lower time frame and they think, can't we just trade on any time frame? The truth is, the reason why you're even there in the first place is because you're addicted to how fast this thing sprints. You can't do sprint, meaning it's giving you opportunities back to back to back. And you are really, really addicted to how it gives you money and all those things. You want to get money fast. You are suffering from impatience. That's why you're on the lower time frame in the first place. Now listen, lower time frames are not bad, but you can use them to your own advantage. So how I trade is that I trade on the higher time frame. That's where I do my analysis on the 4 hours. Now, when it comes to the 1 hour time frame, that's where I choose the levels to trade from. Now, because I choose the levels to trade from on the 1 hour time frame, I also make sure my stop losses are above those levels I trade from if I'm selling, or below those levels if I'm buying. What happens is it's just automatically put my strategy in the day trading category, because where you put your stop loss determines whether you're a swing trader or a day trader or a scalper. Swing traders put their stop loss on daily levels or 4 hour levels, while day traders put their stop loss on 1 hour to 15 minutes levels. The scalpers put their stop loss on 5 minutes, 3 minutes, 1 minute levels. So you need to understand very, very carefully that when it comes to lower time frame, it should be where you get your confirmations to confirm or validate a higher time frame level, like the 1 hour level. You want to see some patterns on the 5 minutes or on the 1 minute, whatever one you like, or 15 minutes, that gives you a go ahead that this 1 hour level you're trading or this 4 hour level you're trading is solid. But you still keep your stop loss based on those levels. Now, if you trade like this, you have more clarity and you have more peace. And there's so much noise that happens in lower time frame will not affect you. Now, there are traders that trade lower time frame and are killing it. They exist. But I'm making this video for struggling traders and beginners. If you want psychology to be easy on you, stop having your directional bias, your POI selection, everything on a time frame like 5 minutes or 15 minutes, because there are so many POIs right there. The trends are changing back to back, meaning your bias is changing back to back in a day. Your POIs are getting invalidated back to back. Everything is like horror. Step up your time frames. Lesson 5, profitable prop trading is a separate skill set. So if you're listening to me and you just can't wait to get profitable, and you're like wondering how quick you get profitable and how you pass that challenge and how you go for that funding and how you get that payout and buy your mom her dream house, buy your mom her dream car, and become a successful family. Now, I went through that. This whole thoughts ruined me. I could remember blowing challenge after challenge because I wanted to really make my family proud. I really wanted to live that dream. Now, getting profitable is one thing, and being good at profit is another thing. Getting profitable should be your goal at first because it's easier to attain. Getting profitable with your live accounts, trading one live account for months up to years and being in a net profit, it means you know what you're doing, you're profitable. And when it comes to profit, it's more of gambling and luck influenced. Skill set is a major thing there, but luck is more influential, and the gambling and luck methodology is more influential in prop trading. As a matter of fact, a profitable prop trader is not a trader that has multiple funding forever and is just making only payouts. As a matter of fact, most profitable prop traders do not hold funding for several years and only keep getting payout. If you notice, they're always in that loop of buying challenges, getting funded, getting payout, then buying challenges again. It's because what it takes to be profitable in prop firm is getting more payout than your challenge fee spent. So if there's any factor like challenge fees spent, it literally means that even as a profitable prop trader, you still lose your funded account. You can still lose your funded account. You can still lose your challenge account, and you still keep buying props. So your profitability is measured how much you make from prop firms in general versus how much you spent. So it's a different skill set. I'll make a separate video on prop trading later, but I need you to know the different skill set. So focus on getting profitable on a live account first because it's way easier. Props are way technical and way harder. And if you think you can go from broke, even if you're profitable, if you think you can go from broke by just buying 5K accounts and growing it and increasing your portfolio to 5K, if you think you can do it, just know that it's extremely hard and it happens maybe 2 out of 100 trials for people that did it. It's really difficult and you should rather work a job, fund your live account, grow your live account, then the proceeds from all this job and live account you can use it to get prop firms. And it requires a different psychology, a different skill set. Everything is just different, and I'll make a separate video about that. So keep your hopes down. Just get focused on getting profitable on live account first before you think of the more harder and advanced one, which is prop firm. Lesson 6: do not underestimate how wicked the markets can be. Now, I will learn this later in my career. I had a profitable strategy. I was doing well. I was making profits. I was making withdrawals. I was getting payouts. All of those things. And all of a sudden, I get struck by on February this year, 2025. I made this video about talking about my journey, and I was so shocked how the market destroyed me. Initially, before last February, I thought I was among those traders that say losing 10 times in a row, your strategy is bad. Losing 6 times in a row, you have to check your edge. I was reasoning like that. But this market showed me that 15 losses in a row can be possible. This market showed me the worst case scenarios. Like I saw the worst case scenarios. So do not underestimate the market. If you're in that argument out there saying 5 losses in a row is wrong, 10 losses in a row is too much, your strategy is trash changing. If you see yourself saying that on social media, it means one day you will fall into this and you'll be so fucked up mentally because you will not believe this is happening to you. You will try everything possible to get out and it's going to get worse. So do not underestimate what the market can do. Only what you have to do is follow your rules and trade and know that things can get really fucked up. So when you know things can get really fucked up, from the beginning of any account you're trading, you're going to use a tiny risk management. Example, risking 2% per trade. A trader that risks 1 to 2% in his live accounts knows that potential really deep bad times can come. And there's no way you're losing 50 trades or 100 trades in a row. Now, if that's possible, then that's too much. So you see them using a tiny risk. Unlike the traders that come with high expectations and optimism, and what they do is they start with risking 10% per trade on their live accounts, 5% per trade on live account, because they don't know that this 10 loss in a row can come. You see them say, I can't lose 10, I've never lost 10 in a row. They're underestimating the market. And when you move like this, the market will come for you. And when it comes for you, you will see yourself lose that 10 in a row. While you follow your rules and you do everything right, in your very eyes, you will see it and you won't do shit. What happens is you're going to lose that whole capital. Some traders start reverting to reducing risk, which is further going to make it harder to come out from drawdown. So don't underestimate the markets. Rather, you should use tiny risk and continue with that. Any account you want to go aggressive on, start aggressively from the beginning of that account and understand that the account can blow and you are fine. Now, with that mindset, you're free to trade aggressively. So I've been getting DMs about what prop I use and how their rules are like and everything. So I use QT funded. This is the major prop I'm trading with, and I've made a video about my progress so far on QT funded. Although I'm out of that losing streak I talked about in the video, but my QT funded accounts I've had the best trading experiences ever. I don't experience any slippages, no commissions. Now they have spreads, but the spreads are decent and very minimal for USD pairs. So if you want to get funded with QT funded, there's a discount going on if you use my link. If you use my code DUBI. So use the code DUBI and get 50% discount on any account you're purchasing from QT. And how do you get to see their rules? The link is in the description. Click on that link, go through their rules, create your accounts. You can message me on Telegram and ask me any confusing thing you have about that you read about their rules. And the account type I trade is QT Prime, which has no consistency rule. Everything's super smooth. So The description is there for you. Go check it out. And listen, don't forget to use my code. Lesson 7. Only backtesting will fix your psyche. So this will really contradict what you've been hearing. But books, advices, videos will not fix your psyche because they're just telling you. The real way to fix your psyche is an inner conviction and understanding about something. Example, you will never trust to live with a stranger you've never known in your life. You don't know them, you don't trust them, you won't let them into your house. And that's normal, it's survival instinct because you're human. But then how come a strategy you have not tested, a strategy you don't have stats about, you just learned on YouTube or on a free video, and then you use the strategy and fund an account behind it? Why? So your first 2-3 losses, you're already scared, your hands are shaking, you're anxious, you're nervous, you are in panic. Why wouldn't you be in panic? You don't trust the strategy in the first place, and that's fine. So you start panicking. What happened? Because you've not tested the strategy. Now you start doubting. Now 2-3 losses, even more, you are completely blown off. Do you want to experience this? No. Do you want to continue having these problems? No. Back test. Now back test. Why does back test fix your psychology? Now, backtesting shows you the strengths and weakness of the strategy. If you're this kind of person and you think a good strategy is not supposed to have losing streaks, in your backtest, when you're trying to build maybe 100 to 1000 trades reps, you realize losing streak happened to you several times, and you realize winning streak happened to you, bringing you out of the losing streak. You realize bad times, extreme bad times, and extreme good times come, and you still see yourself profitable overall. Now, if you don't see this thing happen over and over repeatedly, and still see yourself come out from Jordan, if you don't see this happening in backtest, when they happen in real life, you freak out. So you can go through 6 losses in your backtest. Now, if you see 6 losses in real life, you're cool because you saw it happen in backtest and you saw yourself come out from that loss with the same strategy. So backtesting will give you conviction, make you trust the system. You have seen the worst side of it, and you've seen the good side of it. So you can trust the numbers to play out. When you don't have backtested stats, or you're the kind of trader that backtest without journaling the stats, you are doing nonsense and you always have psychology issues. See this thing I said, psychology issues fixed. Because everything that brings you psychology issues is uncertainty and trust issues. Try to fix the trust issues, you'll be fine. I enjoy speaking to you guys. I'm going to see you guys in the next video. Do well towards like this video and subscribe. I want to see your thoughts and comments in the session. How long have you been trading? How long have you been trading? And what are also the lessons you've learned from your trading? Peace.